Good afternoon and welcome to the HeiQ PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it received during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Carlo Centonte, CEO, and Zafir Hangartner, CFO. Good afternoon to you both.
Good afternoon and welcome everybody to the fiscal year 2021 annual results and the strategy presentation of HeiQ PLC. I'm here in London and I'm very happy to present you our numbers for the past year. And the agenda will foresee that we move into the highlights at first, then talk about growth and track record, and then touch our strategy and also the outlook for the technologies that we have, but also for the current business that we are running. First of all, let's move into the fiscal year 2021 highlights. We have in this past year strengthened our core business and we have really accelerated towards meeting our ambitions. We completed 3 M&As for a total of $28 million, which have been broadening what is a very strong product range of bio-based hygiene offering. We paid 42% in cash and 58% in shares. Together with these acquisitions, we have further increased the strength of our employees. We went from 140 to over 200 employees, of which we hired 20 in marketing and sales and 30 in innovation. So a big investment into the future in a difficult and intense year that we've been running. We've delivered a 15% revenue growth and we have increased the cash generation. We did show resilience and we also had continued demand for our technology in what was a complex year worldwide. We maintained, by doing this, a strong balance sheet and a very healthy financial structure, and Xaver will tell you more about that in a few slides. We made excellent progress towards what is our midterm revenue target to be a 300 million company. And we have the drivers behind that are innovation. We launched 21 new innovations, and worth it to point out, the world first climate positive fiber HeiQ Aonic. With this blockbuster, we immediately caught the attention of the market, the textile industry, a 1.7 trillion industry. Hugo Boss, one of the leading brands listed on the German stock exchange, a 4 billion company, invested 10 million into our subsidiary at an implied valuation of 200 million. We also moved forward strongly on a second blockbuster that HeiQ is entertaining as a technology platform, HeiQ Graphenix, a highly porous graphene membrane, which has last year demonstrated its viability for new 5th generation lithium metal batteries, which would enable double energy density and also faster charging time and longer lifetime. So a big progress on the second blockbuster field. And the third one, just recently published, the leading key opinion leading hospital in Europe, the Charité in Berlin, has been proving our symbiotic cleaning technologies far superior to disinfectants to fight nosocomial infections, multi-resistant bugs, the golden stuff, etc. in hospitals. So also here a big progress made on a third blockbuster technology that we are promoting towards commercialization forcefully. Summarizing, we are very well positioned for long-term growth with what is a set of market-leading ESG technology platforms. And based on the results that we achieved last year and how we see the market this year, we've set ourselves a growth target for fiscal year 2022 of 20%. But let's touch the business highlights on the financial side. As mentioned, we had a revenue growth of 15% in 2021. in what was a complex year with lockdowns and supply chain distress, which made business difficult. Nonetheless, we managed to grow on the top line. We did suffer on the second KPI on the gross margin, losing 9% here, and basically got put back to the 2019 numbers. That's a setback. It was driven by the inability to pass on price increases as first mover on the market. We had to wait for the entire industry to move into price increases in order to follow suit. So we will recover some of these margin. This is a temporary setback that we have experienced along with the entire industry. It has reflected on our EBITDA, which has scored at 6.5 million for 2021. And this is driven by the lower margin, but also by our investment in more innovation, in more sales, in more capabilities on the SG&A side. Earnings per share are equivalently affected by this reduction to 2 cents per share. If we do look on the operational cash flow, then here a positive number with 3.5 million, which is better than in the 2020 year, which was with 1.1 million. And if we look at the innovation, which is a KPI that is very important for what is an innovation leader, we had 22 new R&D projects entering our channel, and we had 21 innovations launched, of which 1 blockbuster. Important to note, we filed 5 patents. It's also here a very strong IP generation year for a purpose-led IP creator that we are. Also noteworthy and important differentiation, we've had an increase of 81% of free media mentions. Please keep in mind that they are long-term building our brand equity, a substantial value for us as we are ingredient branding for many brands worldwide. Now I would like to go deeper on the growth track record, and I'm handing over to our CFO, Xaver Hangar. Xaver, please.
Thank you, Carlo. Let's first look at the most recent years, the past 3 years, where we see a strong growth record half year over half year. And it's also clearly visible how exceptional the first half of the year 2020 was. With that, you can also see how we were able to replace non-recurring opportunities that we were able to materialize in the first half year 2020 by recurring business over the past 1.5 years. If we look at our growth track record on the long term, we see that we have an impressive overall compound annual growth rate of 77% per year, and that this growth also is achieved along a very steady growth trend overall since inception in 2006, actually. If we look into our growth by function, and just to remember, HeiQ offers basically 4 functionalities in 4 forms. And these 4 functionalities are hygiene, resource efficiency, comfort, as well as protection. Hygiene, with about 50% share of our total sales, shows a growth of 1% in 2021. However, one has to consider that 2020 includes a material non-recurring opportunities of about 10 million. So we were able to replace these non-recurring opportunities with rather recurring business. If we look at resource efficiency and comfort, we see that both show significant growth in 2021. And as such, this confirms what we see in the markets on a daily basis. Triggered by the pandemic, brands are looking for functionality. We experienced that fashion brands in particular, that in the past were less focused on functionality on garments, show increasing demand for our functionalities like temperature control within the comfort category, for example. As an example, we have Hugo Boss, a leading fashion brand that is currently assessing over 6 different functionalities with us, just to give you an example. If we look at the other dimension, sales by form, and with form we mean functional ingredients or textile chemicals, if you want, functional materials, functional consumer goods, and services and licensing. Similar to the hygiene, functionality ingredients is clearly still the dominant form in which we achieve our revenues, and also functional ingredients with 4% have a rather small growth in the last year. However, also here, most of the non-recurring opportunities of the previous year are within functional ingredients. So this 4% is something we were also able to replace this with recurring business. The other forms which grew significantly show basically the progress of our overall strategy. And this is to move from a specialty chemical business within the textile industry that has strong IP towards an innovator that has multiple ways of monetizing its IP. And as such, we are very pleased by the strong growth of services and licensing category. If we now look at how all this translates into our profit and loss statement, as discussed, overall we grew by 15% on the top line on revenues, and as mentioned by Carlo previously, the gross margin continued to be under pressure from supply chain as well as issues throughout the year, and especially in the second half year, and also to a certain extent from a change in the product mix. SG&A costs, as also flagged by Carlo, have increased by over 50%. And on the one hand, this was driven by costs we onboarded with the 3 acquisitions. And on the other hand, this also reflects our significant investments into innovation, into our commercial teams, as well as into the scalability of our entire organization. Putting this all together, we see the profit decreasing compared to the exceptional prior year, but we are very confident to have laid a very solid foundation for our future in the past year. The EBITDA with 6.5 million is roughly is more than double than the EBITDA we had in the 2019 year, the pre-pandemic comparison, if you want. If we look at our balance sheet, despite acquiring 3 companies, investing significantly in growth, we have maintained a very strong and healthy balance sheet with a low leverage. On top of a net cash position of 13 million, we have credit lines of another 9 million available. And also, as reflected in the current and quick ratio, we have a very healthy relationship between current and assets and liabilities. And with a 63% equity ratio, we are pretty much equity financed. And as a other important point for investors is that the extended management team is invested with about 23% of equity and therefore fully aligned with all our investors. The cash flow from operating activities, as Carlo already mentioned, improved significantly by over 200%. And also the cash conversion ratio with 1.41 is a strong KPI. We typically invest about 10% of our revenues in innovation, and a part of this is showing up as development of intangible assets, while another part is captured in the profit and loss as expenses. Cash was also used for the acquisitions of the 3 businesses as outlined in the cash flow statement. And summarizing all the cash flow statement, balance sheet, and the profit and loss, we can summarize that we were able to grow significantly and build a very solid foundation for our business, while the profit was impacted by the market headwinds that the industry have faced last year. However, we end the year in a very strong position, and we have a lot of market opportunities ahead, and with the cash, with the strong balance sheet, we are very well positioned to take advantage of these opportunities. And as such, I hand back to Carlo to take you through our strategy and the outlook in regards to these opportunities and what is out there for HeiQ.
Thank you, Xaver. And I start recapping HeiQ at a glance for you. So we are a profitable and purpose-led IP creator for novel materials. We're a global and diverse company today. We have now more than 200 HeiQians worldwide in 14 offices with 7 manufacturing sites and 8 R&D hubs. A very diverse team, 29 nationalities, 35% female leadership, and clearly an innovation powerhouse on the market. We operate with 7 technology platforms, out of which we've been able to create more than 200 innovations, more than 11 patent families, which have been multi-awarded both by the Swiss Environmental and by the Swiss Technology Award. And we're operating today a 50 people strong internal R&D team while working with a 30 strong university partner group in which we are financing another 40 PhDs and partners that are researching with us. So as Xaver said before, big focus and big investment from HeiQ in innovation, with 10% of our total revenues put into this basket again for future technologies. But then we're also a differentiating company. We want to bring the innovation from lab to consumer. We want to do that quickly. In order to do that, we have to interact with the market, with consumers, with the brands. And we're working with 300 brands worldwide today, many of them Fortune 500 companies, to which we are catering 16 tech brands, in total 200 trademarks that we have on our IP side that they are using to communicate the benefit to consumers. And this is possible because we have 2 teams working with the brands, 1 brand for each team, 20 people strong, talking day and night to the brands about innovation, and 1 marketing team, 15 people strong, which is packaging the innovation story and the message for the point of sales for the consumers as a branded and trusted partner to commercialize the innovation. Now, if we move into the beating heart of HeiQ as innovator, we are a client-led and very lean innovator. The emphasis for us is rapid, deep co-creation, and we do that by applying a validated and unique innovation methodology, the RDM process, which brings innovation from lab to consumer at HeiQ by informing these market needs with 7 IP technology platforms, by also leveraging what are our boundless research networks capabilities with 30 university partners, 15 advisory board members, and by financing an additional 40 PhDs. But we also convert this research validation proof of concept, this fast proof of concept, we transform that with a 50 people strong internal R&D team, of which 20 PhDs, to be quick in the creation of a final product, which in our 8 R&D hubs has the opportunity to be informed much faster than our competition. We're typically 3 times faster with an innovation to market, and we're also much better at leveraging innovation by getting additional government grants to support every dollar of investment that we put, with multiple dollars of state grants available. Lastly, but not leastly, we are packaging the innovation with what is a consumer validation process, and also with very strong ingredient branding, where we are capturing the value of the functionality of the added value that we have brought to market. So with this, in short, the uniqueness of HeiQ, our unique innovation model, which allows us to be active in all 3 fields of innovation: incremental innovation, where most of the market players are; radical innovation, where we are creating the first blue oceans; and disruptive innovations, about which I'm going to talk to you in the next slides a bit. Now, how is the growth strategy for the current year, and what is our targets? I mentioned to you before, we want to grow revenue by 20%. If we look back 2019 to 2022 with our ambition, you will see that the compounded annual growth rate will be 35% per year. And how do we want to inform this growth with the 4 functions that HeiQ is promoting? Well, firstly, on the protection, we have 2 big carpet projects that we are running. HeiQ Eco Dry for stain and water repellency, but also HeiQ Symbio for pet stain and odor control on carpets. Both of them are in full swing and moving forward on the market. In comfort, we have HeiQ Effect STR, which is a recyclable elastomeric finishing technology, and 2 cooling technologies, the 7th generation of our dynamic cooling technology going to market this year, and then also HeiQ Cool, which we launched start of the year, which is a new bio-based instant cooling technology. And if you look on the heat waves in India that are running at the moment, you see that we have a hotter planet, and a hotter planet requires better cooling technologies on textiles, which HeiQ is market leading in this field. Resource efficiency, we have the blockbuster HeiQ Ionic, world's first climate positive fiber. We'll come to that on the next slide. But also HeiQ Cleantech, which is allowing, during the dyeing of polyester, to reduce the energy, water, and CO2 savings by more than 35%. And with the current energy prices, there is a much increased demand for this Swiss Sustainability Award-winning technology from 2019. We also have HeiQ Ecos, which is a low emissivity technology, preventing infrared energy loss and gain, which we are initially positioning on the market out of the lab from last year. Hygiene field, our biggest business field, HeiQ Symbio, which we acquired last year. Probiotic hygiene of surfaces in healthcare facility. That is a big focus from us this year. We already serve 50 hospitals. We want to make that many, many more. HeiQ Life, another acquisition from last year, botanical peppermint antimicrobials. Also here we see a very strong demand from the market for this bio-based sustainable technologies to be deployed swiftly on the market. HeiQ SandPure, the 3rd acquisition technology for durable hygiene coatings for hospitals. especially after COVID, after disinfection. There is a lot of resistivity of bacteria in the healthcare field. We'll see that later, and solutions are needed to mitigate and minimize the risks. Lastly, HeiQ Fresh, bio-based odor control for textiles. So I'll put that all together. This is our growth drivers for the 2020 year and beyond. But now let's move into our blockbusters, and let's take our first blockbuster, HeiQ Aeonic, world's first climate positive yarn. Let's start with a statement from the Ellen MacArthur Foundation that by 2050, it's assumed in the studies that there's going to be more plastic than fish in our oceans. Now, this is a terrible scenario, and action is needed urgently and swiftly. So what's the problem that the textile industry is contributing to this? Well, the textile industry is responsible today already for 20% of global CO2 emission. In a few years, it is estimated to pass the energy industry, which is the most polluting one. So action is needed, also because less than 1% of textiles is recycled, and it's gigantic quantities. And unfortunately, most of these quantities are made more than 60% out of polyester and nylon, which are coming from oil. And polyester and nylon take up to 1,000 years to degrade in the environment, and are a long-term problem that we are putting into many ecosystems. The most sensitive ecosystem, the oceans, they are already contaminated by microplastics and microfibers. 30% of that is coming from oil-based textiles such as polyester. Now, these ecosystems are essential for climate regulation. If they break down, then the marine ecosystem is responsible for 50% of global carbon absorption per year. So essential that we do everything we can to mitigate and minimize disruption in these ecosystems. That's the solution that we've developed over the last years, the first climate positive circular cellulosic filament yarn. With it, for the first time, we have a chance in the textile industry to substitute polyester and nylon. HeiQ Aeonic is made out of cellulose, which is a biopolymer, which is binding carbon from the atmosphere. So we are decarbonizing, and that gives us an opportunity for every ton of polyester that we are substituting with HeiQ Aeonic, we are able at least to reduce 5 tons of carbon dioxide from the atmosphere, which gives us also the potential to capture carbon credits for HeiQ Aeonic. The market potential is very big. The global polyester and nylon production per year is in excess of 80 million metric tons. That represents 135 billion US dollars market opportunity. Accessible, in the next couple of years for us, we deem that to be 2.9 billions, and this market keeps growing with more than 3.5% per year. So what are we doing? We are building up, but we are also considering really how we can work with tech licensing and franchises in order to accelerate the market adoption. Again, we have very little time to act and replace polyester and nylon from textiles, less than 10 years, so we have to use the fastest commercialization path to help the ecosystems most. Now, as soon as we launched this technology last October, we immediately found endorsement and investment from the community of brands. First mover Hugo Boss, who acquired 2.5% of our 100% subsidiary, HeiQ Aeonic, for an investment of 5 million, which puts the technology at an implicit valuation of $200 million, much more than our current share price. With this comes additional 5 million, 4 million as tech fees, and 1 million as prepaid goods, but also an option for Hugo Boss on 10 million euro for another 5% equity. And second was the partnership with Lycra on this. Lycra, a well-established ingredient brand in textiles for fibers, elastomeric fibers, so ideally positioned to distribute fibers for us. And Lycra acquired for a 7-digit tech milestone fee the exclusive distributor rights for HeiQ Ionic. Now, where the next milestone for this exciting technology? We are establishing our pilot commercialization plant in this first half year, so that we can produce in the second half year. That is fully on track, despite the difficult situations on the logistics worldwide and availability of parts. So big thanks to all the Ionic team for putting in all effort to make the timeline happen. And the second objective and milestone that we have is to onboard more brands like Hugo Boss. I'm also happy to tell you that we're negotiating more than a dozen deals with similar structures at the moment, where we are confident that we will be able to create a strong endorsement by the textile brand community for this technology. We're also validating this new scale-up technology that we are starting in a couple of weeks from now until the end of the year. And at the end of the year, we want to be able to push button on the first gigafactory, 30,000 tons as manufacturing target that we want to do, up to 300 million investment that we will have to put. And this new plant would be ready by the end of year 2024 and would then generate more than 200 million sales per year at a high double-digit gross margin that we could realize. So very exciting technology, a game changer in textile, and we as a disruptor in the industry are the tip of the spear to first decarbonize polyester with our clean tech and then replace it in full with Ionic. But let's move into another field, ever more important, energy transition, green energy. Here, the first application for HeiQ Graphenix, our highly porous graphene membranes for batteries and electronics. What's the opportunity with the technology? Think of it as an ultra thin, extra strong, strongest material in the world, fully permeable and fully conductive. And now we can put this in countless industry applications. Well, the first application that we found was how we could enable the next level of batteries. Lithium metal batteries, not lithium ions, but lithium metal with a much higher density, more than 50% more energy density, also much lighter, more compact, faster charging, giving a longer lifetime. And if you look at what we managed to achieve this year on the right side, then you see here a lithium metal battery, and plotted on this graph different lithium metal constellations that have been tried in the past. Bottom right is where you want to be, the most number of cycles, and also the lowest over potential buildup. Over potential means that the battery performance is maintained over the cycles in chargeability and energy density. And you can see the red dot where we did our first testing stop, and then where we actively stopped when we reached 1,290 cycles, which is more than batteries are tested for normally. And we excelled as the absolutely best performing potential lithium metal battery constellation. Now, what does that mean for us? It means that we are able to talk with players in a 150 billion market, which is growing at 25% per year. And it means that we have been able to demonstrate a battery pilot proof of concept with excellence. And this has led us in several JDA discussions with battery leaders. I'm happy to tell you they are progressing, and we're making headway on this, so expect news on this field in 2022. What's our next milestones here? It's scale up of the commercialization plant, which we finalized to design last year. So it's it's on order, and we want to also have a similar deal structure to what we did for Aonic with Hugo Boss. We're building the pilot plant. At the moment, we are de-risking further this technology so we can have also here a gigafactory in future. And we are engaged intensively in manifold different application developments. Again, this technology can be used in batteries, in rugged electronics, in desalinization plants, in dialysis, etc. So many application fields with a clear focus from HeiQ at the moment on batteries and electronic vents for rugged electronic devices. Now let's come to the last of our three blockbusters that we are intensively working on. Symbiotic cleaning for hospitals. What's the problem here? British Prime Minister commissioned a study, and the outcome was that by 2050, 10 million people will die each year due to antimicrobial resistance that they acquired in healthcare facilities. This would cost the world up to 100 trillion per year, which is equivalent to 2 to 3.5% of GDP reduction. So it's a big problem, not only ethically, but also economically for the world. And one of the reasons why this is happening is that there's a very frequent use of disinfectants, especially in COVID times. People have been disinfecting hospitals 6 times a day, and disinfection gives rise to multi-resistant bacteria, the so-called superbugs, or you might know them as MRSA or golden staph. Now, what's the solution? How can we still clean, but clean safely without these downsides that disinfectants are bringing? Symbiotic cleaning, using good bacteria, probiotic bacteria, in order to have a cleaner that has a positive effect. And the positive effect that we managed to achieve with HeiQ SymBioClean is that we reduce the antimicrobial resistance by up to 99.9%. So completely, this problem goes away. We're also reducing the hospital surface pathogens by up to 90% more than disinfectants. This really shows you the USP of our technology. We are reducing the costs associated for the hospitals from managing the infections by up to 75%. And we're also reducing the days of treatment with antibiotics if somebody gets sick by up to 86%. So very strong third-party independent data validated by the over 50 hospitals that have been using this. The market potential also here is significant. Hospital and household cleaners are in total 55 billion. They grow at over 5%. And the progress to date on this is that just last week, we have the official publication by the key opinion leading hospital in Europe, the Charité University Hospital in Berlin, with a study supervised by the Robert Koch Institute on symbiotic cleaners versus disinfectants, proving that they are far more effective and safer than disinfectants. Now we're also selling today already to more than 50 hospitals recurringly in Europe. We won a Chinese one, and with this publication and next week the Interclean, the largest cleaning fair worldwide, we are promoting and pushing these breakthrough data that have been generated independently to maximize the commercialization potential of this technology swiftly. Next step here is we're registering the specific cleaners for the European Eco label in professional cleaners and also for use in the medical and healthcare settings. So that will give us a very strong regulatory promotion and claim set that we can bring to market then in the coming years. Summarizing 2021 and giving you a bit an outlook, which for us is bright despite the challenging times everybody's in. 2021 was a year of continuous progress to make the strategic investments into what we deem to be our future growth. The team showed resilience. It was really difficult. The raw material challenges were substantial. Price increases of 400%, logistic cost increases of 500%. Worse than that, availability of goods and transport, but also then lockdowns in significant markets where you have impeded sales. So that was the year which we mastered still with revenue growth, profitability, and strong investment in our capabilities. Now, 2022, we do see out of last year a continued strong demand for our innovations. That's supporting our growth target of 20% for the year. And we have tremendous opportunities, as I hope I managed to convey you for the midterm, for value creation to 3 blockbusters. HeiQ Ionic, again, implied valuation as Hugo Boss invested in it of 200 million, more than our current share price. HeiQ Graphenix, very close to onboard a strategic partner. And also HeiQ SynBio, where we have already sales, but are also here close to onboard more larger, significant strategic partners. If we look beyond 2022, then the mega trend tailwinds of sustainability, hygiene, and energy transition are favoring our offering. We are keeping growing the R&D pipeline. We're keeping investing year by year, more than 10% into innovation. And with the potential of what we're creating, we can open doors to many exciting new markets. So summarizing the investment case for you, we had we're on a solid growth path. Historically, 77%. Last year, 15% top line growth. This year, 20% growth target. Medium term, 300 million revenue target. If we look at the financial track record, then we have been cash generative on the operations for more than a decade. We have a very healthy balance sheet and a strong financing structure. We have a strong cash position, allowing the execution of our ambitious growth strategy and innovation strategy. And as established IP creator, we're capable to drive these innovations. We have 7 tech platforms. We have now 3 blockbuster technologies, which are inside of commercialization with a combined valuation of more than 400 million. And we have this more than 10% investment in this innovation funnel per year. You have with HeiQ an experienced, diverse, and very committed leadership team. And I always want to stretch that out. 23% ownership by the management, and still the largest shareholder, and very proud to be so. And we have with our award-winning ESG technologies, Swiss Environmental Award, Swiss Technology Award that we won twice, the credibility on the market and the ear of the brands to drive change for them. And with this I close. With a statement, invest in HeiQ, invest in impact, because we need impact in order to change things, and things can get better only with new great technologies which we are creating and deploying to the market. With that, I close and would like to lead over into the Q&A session.
Carlo, thank you very much. And Zafar, thank you very much for your presentation as well. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Carlo, Zafar, we actually received a number of pre-submitted questions from investors, and I want to start off the Q&A session with these. The first one reads as follows. How much of the equity in HeiQ Ionic is for sale?
We are willing to sell up to 25% at this current valuation and round. Right now we have sold 2.5%, so you would see us sell another 22.5%.
Thank you very much. The next question is also around Ionic and asks, have you signed up all of your 20 brand partners?
No, we're working on that. We have more than a dozen brand partners in negotiation at the moment. So there's a lot going on the business development side. So there's only positive things to report back. The market interest is very high.
Thank you very much. Are you on target for Ionic fiber production scheduled for Q2 as previously stated?
Yes, we're on target, which in these times is a fantastic achievement by the team. They had to go over and above to find all the pieces worldwide, but it has been done, and we are on track to have operating machines in Q2 as we had announced.
Perfect, thank you very much. And the final pre-submitted question refers to your last presentation and reads as follows. In your last presentation, you said that there'll be a joint venture agreement for Graphene X. What is the delay and when is the technology likely to become available?
So again, Graphene X, we are currently focused on two fields. The first field is energy transition / batteries. Here we are working with 3 interested parties, which are progressing on the joint development agreement side. On the second hand, we're working with electronic vents and for rugged electronics. Here we are in touch with 2 potential joint venture partners. So also that is progressing. So also here, the business development is healthy. It's a healthy pipeline of possible transactions that we are negotiating, and also here we expect to be able to bring some to fruition in 2022.
Thank you very much. That concludes the pre-submitted questions, but as you can see, we've received a number of questions throughout today's live presentation, and thank you to all the investors for submitting those. Carlos, could I just ask you to read out those questions and give responses where it's appropriate to do so, and then I'll pick up from you both at the end.
Sure, I'll do so. So we have a question here. What is the growth of gross margin in Q1 2022 over Q1 2021? Xavier, you want to take that one?
Yeah, thanks. If we look at the gross margin development in the year 2021, we see that, as discussed, we are at almost 47% for the full year. However, for the first half year, we reported 50.2% gross margin. So you see that along the year, the margin was rather declining. Now for 2022, analysts project the gross margin of 49.5 or almost 50%. So you see that it is expected that we catch up on gross margin. However, this is likely to happen over the year, and as such, you can read into this that the gross margin in 2022 is recovering, but throughout the year.
Okay, then I move to the next question here. How much of your lost gross margin can be recovered and how quickly? I think we gave an initial answer to that. And the second part, what self-help actions are you doing to get this done? Well, firstly, we have passed price increases. The industry is always reluctant to have the first guy who increases prices stick out his nose. We have decided that we were waiting for the bigger fishes to do so. They did so last October. Following that, we were able to pass on our larger account price increases. So we will see a recovery on that side, and the mechanism of price increases has been institutionalized in HeiQ. Another important thing of self-help is we have significantly invested in a harmonized ERP system for the entire group, which allows us to track in future live price increases from raw materials, and then very swiftly pass on the price increases in what will remain an inflationary environment for the next couple of years to the market, to our customers on a regular basis. So this is, of course, two things. The third thing that we've done, where opportune, we have backwards integrated further, which allows us to control more of the margin, and this gives us more flexibility for pricing, or on the other side, market share. Maybe lastly, we have put a much more professional team together on strategic sourcing on a global group level. That is also helping us to find more suppliers, validate them, and have more alternatives for each raw material that we are needing.
Also, with the strategic, let's say, forward integration from supplying ingredients through materials, goods into services and licensing business model, of course, with the increase in licensing and service revenue, this will also lift up the average gross margin of the company in the mid-term.
Okay, with the next question, do you have any carry forward loss? Xaver, you want to answer that one?
Yes, as you can see in in the details on the equity, we do have carry forward losses. We were able to, on a consolidated level, we have been able to reduce them, and they are mainly historical. You remember we listed through a reverse takeover, and the shell, and also from the listing transaction there were that came with costs, and so yes, we have losses carried forward at the given time.
Okay, we have a question from Robin. Please repeat how many deals you're currently negotiating for HeiQ Ionic, and did you say with similar structure to Hugo Boss, how much of this are you prepared to sell? Again, the Robin, 25% is our target at the current valuation of 200 million. And yes, we have a dozen of deals that we are negotiating on the market, and we expect to be able to close a few of them shortly, with more that we want to do this year. So you can this year expect us to do a lot of activities. Also for the new Gigafactory, ask for state subsidies of several hundred millions to support the investment that we want to do starting 2023 onwards. Okay, then we move to the next one here. With these incredible numbers and development in various products, do you have any idea why stock price is below 35% of starting quote of 112? How do we want to answer that one, Xaver?
I mean, first of all, it's delicate management discussing share price movements, but I think what we need for us, what we clearly saw over the last year, what we need to do better is communicate better the opportunities within our innovation pipeline, and I hope we were able to show this or make this more tangible with Ionic, with Graphene X, with the symbiotic, with these blockbusters, and that's certainly something we work on to make the valuation of our pipeline much more visible and more tangible, and that this will also be appreciated in the share price.
Okay, and we move to the next one from Ed here. I recall that the Graphene X product was potentially a radical solution for water desalination. Is that no longer? Yes, Ed, it still is, but we only have so many hands that we can put with the SG&A increase we already did. And we decided actively that the highest market need is in batteries and rugged electronics for electronic vents. And that's the two industries which we will inform at first. So the desalinization has to wait a little longer, or until we decide to resource that more separately with the first investments coming into this Graphenix subsidiary, similar to what we have for Aonic going forward. And here another question, always from Ed. What are the main barriers for widespread adoption in hospitals of the HeiQ SynBio product? Well, that's habits, and as often that's the biggest hurdle to take. Think of hygienists in hospitals. For the last 50 years, they have to be told that they need to kill bacteria and take everything away. And now we need to teach them that no, they don't need to kill bacteria. They need to put good bacteria and not take away anything, because they will manage the bad bacteria themselves. So that's a shift of paradigm. It's turning from Christian to Muslim, or Muslim to Christian. That's what I say. So it's a big convincement work, hence also the importance of having independent third parties, key opinion leaders like the Charité Hospital in Berlin, the most respected one in Europe for nosocomial infection studies, to endorse this technology and really say, this is it, this is the future, which now happened, and this gives us a very good credibility to move to the market more forcefully. Here's the next question from Michael. Given the continued weakness of the stock price, are you concerned about a hostile takeover of the company, which at this stage of HeiQ's growth would be a big discount of the prospective future value of the business? Well, that can always happen on the market. It's never excluded that this can be the case. If you want, we are, which is maybe giving also a partial answer to the question from before. We are in different industries. If you want, we're informing with different business units, different fields with innovation technology, and this makes it, since we're not a pure play on one technology field only, it's maybe a little protection also for this unfriendly takeover risk scenario, because you wouldn't just get one of the baskets if you wouldn't talk with us. Okay, let's move to the next one here from Ian. Earnings per share 2022. Are you guiding the market, Xaver? Can we guidance?
On market guidance, I would like to refer you to the analyst reports you find on our website. In the investor sections, you find the links to Progressive Equity, which are covering us and which is accessible to retailers, investors, and institutional investors. And for qualified investors, there's also the link to Cenkos, where you can find analyst coverage on us, and including forecasts by the analysts.
Okay, here we have one. Why do you think stock markets investors are not giving you and the stock price credit for the value in your business, especially the implied 200 million valuation of Aonic? Hugo Boss endorsed that clearly by investing in total now 10 million. So it's a substantial amount. We have more deals coming. I think it's just the market needs to get familiar that we have several technology platforms. We have 7 technology platforms. Each one of them is capable to have a value creation for HeiQ. And each one we are now financing with partners on the market. But it will take us a little time to explain that to the market. Hey guys, look at the Aonic, that's 200 million. Look at the Graphenix, that's another 100 million, etc. So give us some time, and I think we will be able to explain that intrinsic value of the technology platforms we have to the market better. Question from Paul here. Would there be some merit in pursuing sports shirt markets like IPL in India? For football, this would provide cash flow and profile while polishing club ESG credentials. Sure, we're working with a lot of brands that are in these shirt markets. there's a lot of opportunities for us to go visible. I think with the HeiQ Ionic, we have such a strong ESG story for the textile market that as soon as we deploy forcefully, we will be overwhelmed with requests there. Michael B here, are we concerned about the value of the receivables? You want to comment on that, Xaver?
Yes, so we have the overall receivable balance is more or less stable. However, I assume this question refers to the overdues we have disclosed, and there this is no, the answer there is for the amount we are concerned, we have accounted for allowances, and for the rest we as management are convinced that this is collectible.
Okay, then one more here from Helder. Given the exponential demand for mobility energy storage and the increasing search for replacing established components and technologies with more efficient and eco-friendly ones, can we expect from HeiQ an increasing focus, investment and research on this technology field? So yes, energy transition is a key field for us. The Graphenix project and subsidiary stands first in line for that. Energy storage, better batteries, next generation batteries with double density that we have proven to be able to manufacture. This is our focus there, and has a very high value creation potential for us. However, the battery industry is new to us, so HeiQ will focus on joint venture partnerships or royalty-based licenses in this field. While on the Ionic side, which is the textile fiber, we know God and the world in the textile industry, there we will build the plant at first, and we will roll the technology to market forward first before moving into royalty and franchising models. But energy transition is clearly a topic for us. Huh? Okay, and then we have Ian here. What accounting treatment are you going to use for the capital inflows from investors into the new subsidiaries?
Yeah, I mean, of course, it depends on the structure of the individual deals, but typically there is a equity investment component, which would be equity investments in subsidiaries, and there typically is also a technology fee or exclusivity fee, which is then recorded as income in the period as we meet the performance conditions. Yeah, so it's a hybrid. Typically, it's hybrid deals with equity investments, but also P&L relevant revenues for us.
We have a question from Tobias here. Are there any further takeovers planned, and are there any capital increases through the issue of new shares for this purpose? So at the moment, we don't foresee capital increases. Again, we are financing the technologies in the subsidiaries with our clients or joint venture partners that are then working with us to bring them to market swiftly. In terms of takeovers planned, the attitude we have at HeiQ to M&A is always they have to be capability building. Last year we did 3 in a very short time. The reason was we wanted to have a refresher of the hygiene product range to go more green and more sustainable. So we purchased botanical antimicrobials, bio-based antimicrobials, probiotic, symbiotic technology platforms, durable hygiene coatings. And with this acquisition in hygienes that we did, we were able to put together the strongest, most modern, most sustainable product range for hygiene functionality in different market fields. Now, if something like that would come along again, we would definitely consider that. On the other hand, we have a lot of focus in already the integration of the first 3, which is working very well. But then also 3 blockbuster platforms that we need to roll to market. So we wouldn't actively now go out for M&As. We would definitely consider the right M&A at the right price, the right time, if it would come along.
Maybe let me add here, for the executed acquisitions from last year, the 3 acquisitions, for some of them there are still some earnout payments pending, and part of these payments will be, as previously announced, in shares and part in cash.
Okay, we have a question here from Ed. Broadly speaking, where has the majority of new employees deployed in the business? So we had the 3 M&As, and then we on top of that grew from 140 to more than 200 HeiQians. We had 30 people that strengthened the R&D team. That's a very large investment, as you can see, in future innovation, but also in accelerating the current innovations that we already have deployed to market. We had 20 people that were in the commercialization teams, in the sales teams. That's both brand force, people talking to brands, but also mill force, people talking directly on the field to a mill, to a customer that we have. And we had another 8 people in what is the second part, not innovation, but differentiation at HeiQ, 8 people that we hired in the marketing team. Also here trying to create a very strong critical mass that enables us to support our brand partners with market-leading ingredient branding that brings them an added value towards the consumers at the point of sales. So a lot of investments in people. We're investing also in operational people and service people. At the moment, we are across the board of the company running an ERP, CRM harmonization, which is a very big project. Also here we are resourcing and are creating a joint platform which will in future allow us to be very nimble in having oversight of our global structure, but also achieve operational excellency faster and quicker. Noteworthy also to point out, big investments on the compliance regulatory side. This is with increasing regulatory hurdles, and they change very quickly worldwide. So it's really difficult to stay on top of that. We've invested in the regulatory side too, and are investing also more in that, which is a cost, but also in future an opportunity to have granted market access through regulatory permits that allow you to play in the markets. I have one more question here from Michael. Do you have an active investors relations departments working to spread your message to institutional investors, as the stock remains predominantly retail owned and institutional investors would add stability to the stock price? I think we have roughly 23% of shareholding by the management team. We have another 15% shareholding by closed parties, and I think close to 25% of institutionals today.
Yeah, if not more.
If not more.
Yeah. So I think we have rather more institutional shareholders than retail investors.
Yeah. So I would say we've already tilted that institutional shareholding to more than the retail side. And so clearly we do have an investor relations department which is working on that, and we also intend to increase the number of people and the skill set that we will deploy to market on this field. One step at a time. but always one step ahead of the market, especially on the innovation side. And here the last question, then probably from Mattia. Do you have any idea of being quoted also in Switzerland? Now, yes, we're a Swiss company in London, and we like it here in London very much. We think this is a great market for us to be in. Maybe the day that we have much more biotech activity, Switzerland will be the right stock exchange for us too, for a secondary listing. I wouldn't exclude that going forward, but we do not have a plan, certainly not for 2022, to do this. Plenty of other tasks to innovate and change the world and bring impact downstream with our technologies that HeiQ needs to challenge and tackle first.
Thank you very much for that, Carlo and Zafer. You've been very generous with your time, and I think you've actually managed to address all those questions you can from investors. And of course, the company will review all questions submitted today, and we'll publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Carlo, could I just ask you for a few closing comments?
Sure. Look, I think as closing comments, we are in a changing world. I guess everybody has noticed that by now. Changing world requires agile companies. HeiQ is an extremely agile company. Changing world requires new technologies to solve urgent problems, and also here we are extremely capable. If you look at the 200 people and the 3 blockbusters already, on top of the 200 plus technologies that we are profitably making money on a daily basis with, that we are informing, then you can see that we are agile, that we are innovative. And if you put on top of that the fact that how we create innovation, we try to be fast in the deployment of it, thanks to branding and ingredient branding. You put this all together with our hat of sustainability that we are running on all technologies, then you can really see that we want to have impact with our technologies. And if you invest in HeiQ, you are investing in impact, and you're investing in changing and disrupting industries, and that is our mission. We want to leave a legacy in this field of technology innovator, and we have a couple of them at hands that we are very eager to materialize on the market. With that, I close from my side.
Carlo, Zafer, thank you very much for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of HeiQ PLC, I'd like to thank you for attending today's presentation, and good afternoon to you all.